Legal disclaimer. Nothing in this video is financial advice. Always do your own research or consult a qualified financial advisor before making any investment decisions.
American stock markets literally went crazy today. Records were broken. Both the S&P 500 and Nasdaq closed at all-time highs. So, what happened? Why did these markets rally so hard? And is this sustainable? That's also very important because some macro indicators aren't actually that positive. We'll talk about these a bit. Also, crazy things are happening on the artificial intelligence front again. There is a serious shortage in AI, in semiconductors, in all the equipment and products used in data centers, and we are seeing the consequences of that shortage right now. This is creating new investment opportunities for us. I've prepared a deep dive for you on this topic. First, we'll look at what's happening in the US stock market. Then, we'll dive deep into the investment opportunities created by this semiconductor shortage. The crazy day in the US stock market. First, let's look at the statistics of this crazy day. The Nasdaq went up by 1.2%. The S&P 500 rose by 1.05%. With these gains, the S&P 500 recovered all its war-related losses. It reached an all-time high. The situation isn't different for the Nasdaq. I mean, we saw a close very near its all-time high. It's truly fascinating because the war hasn't ended, energy prices haven't dropped. We'll look at the details shortly. How is it that we're seeing such a rally, right? But there are also those who aren't playing along, who don't agree with this idea. For example, the VIX. The VIX didn't drop much. I mean, there's only about a 1% drop today. With this much market euphoria, we would have expected a deeper drop here. As you know, the VIX is the fear index. What does this mean? Yes, there's a rapid rise in the stock market, but some people are still buying put options because they fear the future, and this is keeping the VIX somewhat elevated. Normally, in a rally like this, we'd see the VIX drop towards the 15s. That didn't happen in such a fast rally. Another issue, small cap stocks didn't join in today. The Dow Jones didn't join either. The entire rally came from the Mag 7. What is the Mag 7? If you remember, I mentioned an ETF to you before, the MAGS ETF. It contains 7 massive companies. Companies like Amazon, Microsoft, Google, Meta. Companies like Nvidia, Tesla. MAGS also surged and tested a major resistance level today. It hasn't broken it yet. If it does, I predict it will run quite a bit further. Now, when the MAG 7 runs, they pull all the indices up with them. Even though it's not a broad-based rally, small-cap stocks aren't too enthusiastic. Indices are going up. This is normal for a while. Certain leading stocks always drag the markets higher. But the broader market didn't rise today. Money rotated into the MAG 7, and they lifted the indices. I want you to understand this well. Macro concerns, fear, greed, and energy. Another issue we have is CNN's Fear and Greed Index. It's just bizarre. Last week, this had dropped down to the 11s and 12s. Suddenly, we are back to greed. I really don't like such rapid surges. They always scare me. And here, if the move towards extreme greed continues, we must become even more cautious. Because when markets sprint this fast, they always need to catch their breath at some point. Another thing that worries me is the idea that the stock market is rising because there will be peace. The US and Iran are talking. Trump tweeted today saying, "We are very close to peace." A Pakistani delegation went to Iran. Mediators are working feverishly. We are reaching peace. Meaning, the markets are recovering because of this. Well, in this case, we would expect a bit of a pullback in energy prices. But nothing much is happening. Yes, they dipped slightly, but Brent crude is still above 94, crude oil is over 90, and natural gas is still quite high. So, this sector isn't really buying into this idea yet. It's not saying the war is over. The Treasury bond market isn't convinced the war is over either. Yields are quite high. The 10-year closed at 4.269% today. Before the war, we were around 3.9%. So it's still quite high. What does this mean? The Treasury market is saying, we are not convinced. The inflation risk is still there because the war isn't over. This could drive energy prices up. Again, a somewhat discouraging point. Bitcoin is an asset that trades 24/7 and is highly sensitive to risk, and we call it the canary in the coal mine. It went up today, but not by much. Think about it, Bitcoin had seen 126,000 back when the Nasdaq and S&P 500 were breaking records. Today, those indices surpassed those records. They are higher, but Bitcoin is very, very far from those levels. Here, Bitcoin has its own specific issues. Okay, accepted, but still, this isn't a super pleasant sign either. Portfolio strategy and a bizarre market move. To summarize, yes, stocks are doing great. Currently, very serious buy indicators are flashing on many stocks. Many of them broke through important trend lines to the upside today. I mean, there are dozens of opportunities in the market. If we look purely from a technical perspective, it looks like we have a serious upward trajectory. But macroeconomic indicators are not confirming this. The rally came a bit too fast. That's why it feels to me like it needs a correction. On the other hand, Bitcoin still isn't showing much interest. Therefore, we still need to proceed with some caution. You know, I have about 11% in cash. I benefited tremendously from these rallies. You know, I always said I was buying little by little at those bottoms. Those small purchases are turning into serious profits today. At one point, we were down about 12% year to date. Now we've recovered all of that. We've crossed into very serious profit. I manage quite a large portfolio. But this rally tells us a few things. First, there's a risk-on appetite in the markets again. In every bull market phase, a few meme stocks pop up. I mean, these are completely hollow companies. But somehow, investors play around it and drive it up. Of course, a lot of trading strategies are used here. There are leveraged trades. I'm sure some people prepared for this beforehand. There were short sellers. They burned them and all that. But in every sharp rally, a meme stock like this definitely emerges because people want to take more risk. And I think it has outperformed crypto in these matters. The second important point is the shortage we're going to detail now. AI, data center, chip shortage, GPU shortage, CPU shortage, a shortage of everything. There is truly a severe shortage. That's why everyone started pivoting into this field. The structural AI semiconductor shortage. We need to talk about this AI shortage a bit. There is a very serious structural shortage here. I call it the semiconductor shortage. I prepared a presentation for you. And while preparing this presentation, I utilized AI anyway. AI is doing things I couldn't have imagined before. It has advanced incredibly right now, and this is creating a shortage on the semiconductor side within the entire ecosystem. Now, we'll get into the details of what this shortage is and focus on the investment opportunities it creates. The world is still ignoring the true bottleneck of AI. There are famous investors shorting Nvidia. People like Michael Burry. These people must be crazy. They have no idea where this is heading. Let me explain. These days, the market is obviously focused on the Strait of Hormuz. People are talking about energy-driven supply risks. They focused on energy shortages. But the real bottlenecks are forming, you know where? In semiconductors, in compute power, in memory, in CPUs, in advanced packaging products, in power management products, there are bottlenecks. And this is not a theoretical bottleneck. It has already started reflecting in the numbers. If we understand the problem here, we'll see the investment opportunities much more clearly. Chatbots versus agentic AI, the taxi and the fleet. Why did the shortage start? The main reason is we are entering a new frontier in AI. We are no longer using chatbots. We are using AI agents. we've transitioned to agentic AI. I use these heavily too. What's the difference? If you ask a chatbot a question, it gives you an answer. These agents work for hours on your behalf. They do research. They write code. They generate new information. They teach you something. I mean, they can do incredible things. What does this do? It creates massive new intensity. In CPUs, in GPUs, in memory, in network accelerators, everywhere. This creates critical bottlenecks in these shortages. Companies that dominate these bottlenecks will gain value, just like how dominating the Strait of Hormuz allowed Iran to prolong the war. These companies will make a lot of money from this. What is the difference between chatbot AI and an AI agent? Let me try to explain with an analogy. Chatbots are actually like a taxi. It gives a one-time Q&A response. The connection drops. Tokens, let's call it the unit of AI, the spending unit, it spends between a few hundred and a few thousand tokens when giving an answer to your question, and the GPU is busy for a few seconds at most. So, you can think of it like one trip, one calculation. On the other hand, if you are using an AI agent, meaning if you've given it a command to write code, or if you've asked it to prepare a comprehensive, deep presentation like the one I'm doing right now by feeding it with some information and data, then the agents step in and a very complex process begins. That's why you can view them as a fleet. I mean, instead of a single taxi, there's a fleet here, and as the fleet grows, the fuel need, meaning the token need, increases exponentially. There are multi-step autonomous task chains here. It requires continuous context, memory, and decision loops, and the token burn is measured in tens of thousands, millions. The GPU works for you for hours, sometimes for days. And here, one agent now equates to a fleet, and it requires 10 times, 25 times, 100 times, 1,000 times more compute power. In short, the transition from chatbots to agents is like transitioning from a taxi to a fleet, and instead of a single vehicle, thousands of vehicles are working for you 24/7. Because of this, their token consumption doesn't increase linearly, but exponentially. Because each agent triggers subtasks within itself. If you use an agentic AI one day, like Claude, or Perplexity, or OpenAI, you'll see that when you assign a task, it divides it internally. For example, when you give a presentation task, one agent collects the data. One agent prepares the presentation. Another agent checks the presentation. Another agent checks the formatting inside the presentation. Tons of subagents work like this. And this increases token generation exponentially. The exploding demand for compute. We have very concrete data on this. For example, looking at OpenAI, the number of tokens consumed per minute has jumped from 6 billion to 15 billion in the last 6 months. Where does this reflect? For instance, there is a serious increase in GPU rental prices. Not just in new chips like Blackwell, but across all chips. Cloud providers like CoreWeave are raising their prices because they can't keep up with the demand. Meanwhile, Anthropic, the owner of Claude, which is the real boss of these agentic AIs, has practically exploded. In the last 4 months, it increased its annualized revenue from $9 billion to $30 billion. Can you imagine? I mean, in just 4 months. Why? I'm in the same boat. I used to pay $20. Now I pay $200. We are paying more money. There are over 1,000 enterprise customers paying over $1 million a year to Claude. Pharmaceutical companies, banks. Everyone is trying to utilize that agentic AI. Bank of America says this will continue throughout the upcoming period. At least until 2029, AI infrastructure won't be enough, and we will constantly experience shortages. And the shortage has specific layers. High bandwidth memory, HBM. This is a very critical shortage area. Stocks like Micron, SanDisk, they surged because of this. CPU and system level constraints. We used to always talk about GPUs. Now there are constraints on the CPU side too. Because agentic AIs use CPUs heavily as well. This is one of the things driving Intel's stock up in recent days. Because it's literally raining demand on CPUs, they dragged Intel and AMD way up. Both stocks outperformed Nvidia during this period. Advanced packaging. In this era, physical infrastructure has become a fundamental limiting factor, superseding silicon design. There's serious movement on that front. Power management. Integrated circuits. AI requires intensive power management and consumption. There are severe shortages here right now as well. What does this do? It practically applies pressure on AI data centers and platforms. Usage limits are constantly introduced. While we used to use many AI platforms for free and they gave us a large number of tokens, now they are constantly pushing us to the paid tiers. And even on the paid side, they impose limitations. They don't give you infinite tokens when you switch to paid. They are shifting prices upward and continuously becoming more congested. I mentioned Mythos in a presentation recently, Claude's new AI. A terrifying AI. It seems there will be even more pressure on models there, and even greater need for tokens. Massive scale. Enter Terafab. There are also new projects. Elon Musk's Terafab, for instance. I want to give you some numbers just so you understand how striking this is. Elon Musk says, we are in need of 1 TW of AI power for Terafab and our other AI ventures. We have such a future need. Currently, the world's annual global production is at 20 gigawatts. Because the number of manufacturers here is quite small. There is TSMC. There are some Chinese players. There are some Korean players. And on the American side, there's Intel. There aren't many manufacturers. And all these manufacturers are dependent on ASML. ASML produces the core machinery for the foundries. Meaning, the supply chain here is quite narrow. That's why Elon Musk says we need to build our own chip factory. That's what Terafab is. And he says Tesla's own chip needs alone will be around 1 TW, meaning magnitudes above 20 gigawatts. What will he use these for? He'll use them for robots. To go to space. For SpaceX, for autonomous cars. So, just Tesla's needs appear to be around 50 times the current global chip production. Terafab covers an area of 100 million square feet. That covers an area the size of 3 Central Parks, 15 Pentagons, or more than 1,700 football fields. He is building a massive project. There are many projects like this right now, and these projects will accelerate in the coming days. There will be even more shortage on the semiconductor side for AI. Moreover, this is the second stage of AI. In the first stage, there were chatbots, LLM models. AI was in a learning phase. Right now, with these AI agents, I have digital employees. They are working right now as we speak. They are doing things in the background. We've arrived at a much larger token requirement. Soon, we are transitioning to embodied or physical AI. Meaning, we are moving towards robots. We are moving to autonomous systems. Then, even more AI will be needed. We are rapidly approaching that too. Conclusion, stay in the game. So what is the market doing about this? The market is still sleeping. I mean, they are shorting Nvidia and stuff. This is madness. From time to time, Nvidia's price might pull back. These things can happen. But while there is this serious, euphoric demand on the AI side, shorting AI hardware companies, in my opinion, is madness. If the American economy gets into trouble, if the financing of these businesses is disrupted, the demand for these companies might decrease. But I see these as very low probabilities. Because these AIs are creating such a productivity boost in companies that firms will continue to pay for them. But investors still haven't realized how exponentially the demand for compute is rising. They are still thinking in terms of past cycles. I fell into that misconception at first too. For example, regarding Micron, I said, well, this memory business is cyclical, it goes up and down. I can say that even I realized a bit late that demand would remain very high for many more years. I think on every pullback, and pullbacks absolutely will happen, it is beneficial to continue buying tech stocks, AI-related stocks in the market. That's what I do. The field has expanded quite a bit too. What stocks are there when we talk about this? I mean, of course, there are the big ones that immediately come to mind. Nvidia, TSM, ASML, Broadcom, AMD, Micron, Marvell, Vertiv, ADI, Analog Devices, KLA. There are tons of companies. I could list even more. These are the big ones that come to mind first. They are in different areas. Silver is very important, because silver consumption in data centers is very high. Their ETFs can be considered. Beyond this, there are photonic chips. A huge revolution is happening there. Analog chips are still important. These data centers need to be built. There are cooling businesses. I mean, it's a massive field. What I'm going to say is, guys, don't get hung up on the stocks on the screen. These are just there as examples. I never give investment advice anyway, but try to stay in the AI game. What are the shortage points in AI? Where are the bottlenecks? Invest in these. The rallies here are at incredible scales. There are stocks right now that have gone up 60%, 70%, 100% year to date. This is despite a stock market that has been acting quite negatively. Why? Because there is a shortage here. That's all I had to share in today's bulletin. Thank you for listening. Stay with love. Stay with respect. JBW.